Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you're tuning in from. I'm very, very excited and glad to be here with you this morning as we are going to be taking another fresh new look at the financial market. But before we kickstart our session, we do want to run through our daily routine to confirm that we are all good to go this morning. So if you can see my screen and you can hear my voice loud and clear without distortion, please feel free to let me know in the comment section by typing in hi. So once you type in hi, I get a feedback, a positive feedback that we are good to go and we can start the session. Thank you very much as you do so. So I will be loading my comment section to see your comments and feedbacks, and then let's roll the session on. Okay, so I can see a handful of comment here. Space 1986, Goldorak 21, Pink White, good morning to you. Hello, Top Mind, good morning to you. Hello, Top Tan Cop Tank. I love that name. Thank you. Good morning. More 28. Good morning. Familial 10. Good morning to you. Duly Sinha. Good morning to you too. Makey. Good morning. Thank you very, very much. Hello, Carrie. Good morning to you. Thank you very much. Hello, Steamroller. Good morning. And I'm very glad to have you around with us this morning. Pink White. Mike, very sensitive. That's what Pink White is saying here. What do you mean? Okay, so I'll just do some little adjustment to my mic. Give me a couple of moments. Thank you very much, Pink White, for that feedback. All right, so I just hope that it's quite okay right now. Please let me know again. Pink White, let me see. Micro is loud. Okay, I think I've just adjusted that now. So please let me know. Genomics, good morning to you. More 20 here. Thank you very much. Oh, thank you very much, Pink White. Thank you very much, Steamroller. You guys are just too wonderful for me. So with a couple of handful of feedbacks we have here, more 28, thank you very much. I think we are all on the same page, and it's on this note I welcome you all to yet another promising edition on the X Trend Speed Live. My whole name is Sharif Daramola, and for the next 1 hour I'm going to be your host, as I will be taking you on a trading journey as we dissect the current market conditions from a technical standpoint using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today's trading session. Well, so far this week, we have been monitoring four major assets since the beginning of this week. And in fact, we've been doing pretty well on this asset. We have the US All Spot, which moved significantly well to the downside yesterday. And we were able to scoop in about 100 plus before the bullish momentum came in on that one. So we will be looking at that one in a moment. Then we're also going to be looking at the USTech 100, which I will consider to be one of the most stable and profitable assets on our watch list so far this week. Then we also attended to the GBPUSD, which is currently going through a choppy situation as market participants try to get prepared for the major events for the week. Then finally, my favorite, the XAUUSD, which has also been doing pretty well in the last 24 hours. So don't worry, stay tuned in. Don't miss out on any of these insightful ideas we will be deliberating on today. Now, for those of you who are joining us for the first time, you are highly welcome on board, and I'm very excited to have you around with us this morning. I know that you will be wondering what this is all about and why is it that you are here and what do you think we are doing here. Of course, as technical traders, we usually gather here on a daily basis, come together as a community and engage in follow-ups and reviews of our current positions in preparation of the New York session. So this session usually kickstarts 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in throughout the course of the session so you don't miss out on any of the valuable ideas we will be sharing. My aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So, once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So, with that being said, here we will be diving right into the business. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that are likely going to be affecting the market sentiment for today's trading session. And of course, for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, for today, Tuesday, December 12th, you will see that we have a handful of high impactful events to look out for from both the United States and the United Kingdom. Now, the first three that we have here has already happened, and that came in from the United Kingdom. So the first one on our list here is the claimant count change. Now, for those of you who don't know what the claimant count change is, well, this is a United Kingdom economic indicator that measures the monthly change in the number of people claiming unemployment benefits. Now, a higher than expected figure, or a higher than expected increase in the figure in claimant count change may indicate economic weakness and can negatively impact market sentiment, leading to concerns about the labor market and broader economic conditions. Now, if you look at the data we have here compared to what we had for the month of October, you will see for the month of October we had 17.8 thousand, but it was later revised to 8,900. So we have the actual data coming in at 16,000, which is a little bit below the expectations here, though it's still on the high side and does not really say something positive about the labor sector in the United Kingdom. Then second one here is the employment change, which measures the net number of jobs added or lost in the United Kingdom over the last month. Now, a higher than expected employment change is generally seen as positive for market sentiment, indicating economic growth and potential strength in the labor sector. Now, if you look at the data here, the previous month came in at 54,000 and the actual data came in at 50,000. So there was a little bit of contraction in that regard, as the figures for this month did not meet up with the previous month. So that's not also a good signal here. Then lastly, we had the high low unemployment rate, which is a measure of the percentage of the labor force that is unemployed and actively seeking employment. So a higher than expected ILO unemployment rate can negatively impact market sentiment, signaling economic weakness and potential challenges for consumers spending and overall economic growth. And for this one, it just came in just as expected at 4.2%. So we are going to be looking at how the market participants had reacted to this economic event, especially on the GBPUSD, to see how we will be positioning ourselves for today's trading session. Then moving on, later today, I think in about 2 hours from now, we will be looking at the consumer price index from the United States economic docket, and this is one of the major events everyone is looking forward to, as it's going to be giving us an insight into the inflationary pressure in the United States. Now, for those who don't really know the in-depth of this and how significant it is, well, the index here is a measure, or let me say, that examines the average change in prices paid by consumers for goods and services in the last 1 month. Now, a higher than expected CPI data can lead to concerns about inflation, impacting market sentiment, as it may prompt expectations of tighter monetary policy to control rising prices. Now, this is one event that the Federal Reserve will be looking forward to as they prepare to make a decision tomorrow as regards either increasing the interest rate, leaving it unchanged, or probably, of course, we can't expect them to cut interest rate this time around. So these are the high impactful event we are looking forward to today. And one thing for sure as technical trader is that we want to be looking at the current market structure from a technical standpoint and identify structures and patterns that we will be using to position ourselves ahead of the next move today. Now, with that being said, here we will be diving right into the business. And the first asset we will be looking at this morning, as usual, my USOILSPOT charts usually take about a couple of seconds before it loads up. So while I wait for that loading up, I think I can see a handful of comments here. So let me just run through and let's. Okay, Nikki 74, Emmanuel Lopes, Dino, Panoyo 621. Good morning to you, Stefan Randy Kumar, Kole Sarimi. You guys are wonderful. Thank you very much for checking in. So with that being said, now we have our chart loaded up. So the first asset we are looking at this morning is going to be the USOILSPOT. Now on the USOILSPOT, we have quite there is a dilemma in this market right now. As you will see, the situation has been a little bit choppy in the last 24 hours. And if you remember vividly, I did mention here yesterday that I sold at the breakdown of the $71.38 level. And I did mention here yesterday that if price action goes on to break down the $71 area, we will be adding more sell position, which of course happened, and price moved about, how many pips was that? About 40 pips thereabouts before the bullish momentum came in, taking us out of all the sell positions at that point. Then I did mention yesterday that if price action at any point in time comes back to retest the structure, it could be a beautiful opportunity to join another downtrend scenario, which actually had triggered a position for us all, and price did move about 50 to 60 pips thereabouts in our favor before we were taken out of that positions too as well. And I do hope we moved our stop losses accordingly. If you had done so, you must have been taken out with a worst case scenario break even, depending on where you had moved your stop losses to. Now, the continued buy pressure here is more or less a red flag that are we likely going to be seeing some buy pressure resume today. Now, for those who will be asking, what do you think is going on in the market that led to the buy pressure we saw here? Well, the implication of this was I could attribute it to the U.S. initiating the purchase of up to 3 million barrels of crude oil for their strategic petroleum reserve. That was yesterday to the oil market, and this could potentially lead to an increase in demand for crude oil, which may in turn lead to a temporary increase in oil prices. And I think that that order itself had some implications into this market, as we saw some deep buying happen around that $71 area during yesterday's trading session. Now, this purchase here is likely going to be inciting some positive sentiment into the market. However, we cannot ignore the other factors that are likely going to be affecting the US oil spot. Now, contrary to expectations, the growth in the US shale oil operations has surpassed projection, and non-OPEC producers are posting unexpectedly significant gains. Now, this unanticipated surge in production from sources beyond the OPEC Plus alliance adds another extra layer of complexity to the uncertainties prevailing in the crude oil market. So you will see that we are within a limbo right now, as majority of market participants are not really sure of what is likely going to be happening. So as a result of this, I'm of the opinion that majority are looking forward to the upcoming release of the US Consumer Price Index data, and of course the Federal Reserve interest rate decision for cues into how to position themselves for the next move. Now, from a technical standpoint, let's run through the higher time frame so that we can refresh our memories as to what we saw at the beginning of the week and how we will want to get ready after taking into consideration the holistic perspective in this market. So remember that at the beginning of the week, we started our analysis on the 4 hours time frame, and what we did on the 4 hours time frame was to take into consideration the nature of price action in the last 7 to 8 weeks. And what we saw here was quite interesting, as it's quite obvious that price action has been on a strong bearish momentum, and in fact it also transitioned into what we will call the descending channel. So when we connected the series of lower highs, we have the resistant line of this descending channel, and then when we connected the series of lower lows, we have the support line of that descending channel. And of course, when price action remains within the descending channel, we definitely want to be looking out for patterns and structures that supports the idea of selling that asset. Now, besides this trend line here is this marginal trend line within that range, which of course has been supporting or playing a major role in determining the direction of price action in recent times. Now, in addition to this trend line was our key level, which was situated at the $72 area. And remember how we use our key levels in this community. If price remains below our key level, we want to be looking out for patterns and structures that supports the idea of selling. And if price breaks out of the key level, we want to be looking out for patterns and structures that supports the idea of buying. Now, another thing we also buttressed on yesterday was this interesting breakdown of the key level last week with an engulfing bearish candle. And of course, from a technical standpoint, we do expect that price may come back to retest the structure in anticipation of a downtrend continuation. Now, the question going into today's trading session is, are we going to be seeing a downtrend continuation here, or price is likely going to be breaking out of the $72 area to incite an uptrend move? Now, if we zoom into the current structure and look at how the market has been reacting to the $72 area, you will see that it is more of selling pressure since the beginning of this week. And the same thing happened here. Though we had price break out of the structure, I in fact added another buy position there, but currently it's running in a loss. As you will see, selling pressure continues to negate all attempt by the buyers to break out of that structure. Now, with the way things are going right now, are we going to be seeing the sell pressure persist, which may likely be inciting some sell-off, maybe back into this ascending trend line, or it's just going to be a false way to check out a lot of traders to incite an uptrend move? Now, for us to get a better idea into what is going on here, we want to scale down into the lower time frame to see how market participants have been reacting to the $72 level. Now, when we scale down into the 1 hour time frame, we begin to see things more clearly. So if I just zoom right into where our center of focus is, you will see that price action is back into that range we identified at the beginning of the week. Remember, we saw price was initially confined within the $72 level and the $71.38 area to emphasize the level of indecision in this market. And whenever we have this kind of range identified on our chart, we usually exercise patience and wait for either the breakdown of the range to give us an opportunity to sell, or the breakout of the range to give us an opportunity to buy. Now that led to my buy position here right above the structure, which I told you earlier is currently running in a loss, and I do hope that price will continue to the upside from here. Now, in addition to that range are a couple of ascending trend line which we spotted here yesterday, but I will just use this one for the sake of this session, as this one right here is going to be playing a major role in guiding our trading decisions for today. And you know how we treat our ascending trend lines in this community. As long as price remains above the ascending trend line, we shall feel comfortable in our buy positions and continue to look out for buying setups to capitalize on an uptrend move. So at this juncture, as it is right now, and for the fact that price still remains above the ascending trend line, I still want to feel comfortable in a buy position at the breakout of the $72 area. Now, for those of you who have not capitalized on this one, you could still place a buy stop order above the $72 area. I still think that price action will continue to the upside based on these technical structures here, especially the ascending trend line. Now, in as much as we're looking out for buying opportunities, we cannot ignore the potentials of sellers. Remember, I showed you a structure on the 4 hours time frame where we saw price break down the $72 level and then has come back to retest it a couple of times. And if the sell pressure persists here, this could incite some selling opportunities. Now, what is it that we want to see on this chart that will make us to either buy or sell this particular market? Sorry, to sell this particular market. We've already talked about the buying opportunities here. We want to see price break out of the $72 level, of course, before we can consider buying the US All Spot. But what is it that we want to see that will make us consider selling? Well, the only condition that will make us sell the US All Spot today is for price action to break down the ascending trend line. Remember, we have this ascending trend line, and one interesting thing about this ascending trend line is how it shares a beautiful confluence with that $71.38 level, which happens to be the support line of that range we identified earlier. Now, if price action breaks down the $71.38 level, price would also have broken down the ascending trend line, giving us an opportunity to join a decline to the downside. In fact, I would prefer to see a retest of structure on my lower time frame to give me further confirmations that buyers are finding it difficult to climb back above the ascending trend line to now make me feel comfortable joining a downtrend scenario. But at this point in time, we still maintain a bullish bias, and for those who are yet to join any buy opportunity, kindly place your buy stop order anywhere above the $72 area to capitalize on the uptrend move. And the only condition that will make us sell is for price to break down both the ascending trend line and the $71.38 level. So this is my simple view here on the US All Spot for today. So I do encourage us all to mark out these levels and trend lines on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So if you have any questions whatsoever as regards to the current setup, or probably my explanations, and you need me to clarify an aspect you really do not understand, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, after which we will be moving on to the next asset on our watch list. I see a comment here from Top Mind. Top Mind is asking, when can you buy and sell it? I think you answered that question early enough, I guess, because I just talked about where we are going to be buying or selling this particular asset, and I do hope you are around when I was talking about it. Okay. Then Kabul, good morning to you. Kabul, Cario, good morning to you. All right, no one else here. So, in the absence of no other questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100, another phenomenal move we enjoyed on this asset in the last 24 hours as we bought at a breakout of the $16,097 level, hereby scooping over how many pips is that right now? Over 150 pips in profit on this particular asset. So well done to everyone who had taken advantage of this opportunity. Now, this asset here is going to be affected by the anticipation of the CPI data and of course the Federal Reserve interest rate decision, which is coming up much more later tomorrow. Now, the Federal Open Market Committee, that is the FOMC, has begun the two-day meeting today, and the interest rate decision will be announced tomorrow, Wednesday. Now, the markets are widely expecting that the FOMC to leave the interest rate steady at 5.25 to 5.50 for the third straight meeting. Now, market participants anticipate that the FOMC will not only halt rising interest rate, but will also begin cutting rates as soon as March 2024. Now, this is one thing that is driving the market sentiment right now and in favor of the US Tech 100. Now, for those of us who had capitalized on this opportunity yesterday, I do hope that we've moved our stop losses accordingly to secure this current position. And if you have not, I would recommend that you do so right away. Now, the question is, where do we think that we want to be moving all stop losses to? I will suggest that anywhere around the 16,200 area seems most appropriate to lock in your positions right now. Move all stop losses into that area, and remember that while you are moving your stop losses, you do want to give enough breathing space for price action to move around. Now, this will help us to allow room for retracement move consolidation phases before the next uptrend continuation happens. So I think I'm not seeing some reception here. Can you hear me? Can you see my screen? Please let me know in the comment section if you can do so that I can get a confirmation that we are all on the same page. Hold on a second, please. Give me a moment. Let me check. All right, I'm so sorry for the break in transmission. I got to know very late that we're already offline, so I had to sort out some internet technical issues, which I hope that everything is quite fine right now. So if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section, as this will confirm to me that we are all on the same page. But from our own hand here, everything seems quite all right. Please let me know in the comment section if you are okay. Thank you very much, Team Ruler. Glad to know that. Thank you very, very much. All right, so let me quickly run through again what I was talking about here on the US Tech 100. So I was saying here that the new week has started on a very positive note for us on this particular asset, and I was going on to talk about the fundamental factors that are likely going to be affecting these assets today, and in fact for this week. And I did mention about the Federal Open Market Committee, that is the FOMC, who they begin the two-day meeting today, and the interest rate decision will be announced tomorrow, that is Wednesday. Now the markets widely expect that the FOMC will leave interest rates steady at 5.25 stroke 5.50% for the third consecutive straight meeting, and market participants anticipate that the FOMC will not only alter interest rates rising interest rate, but will also begin cutting rates as soon as March 2024. Now, with this data here, with this data here, and the anticipation of the high impactful event from the United States, you will see that in the last 12 to 15 hours, price action has been consolidating, caught within a range to further emphasize the level of indecision in the market, which is something that is usual with such events. Now, I did went on to emphasize that for those who still have a buy position, that we do want to be moving all our stop losses to that area around the 16,200, and I did emphasize that while you move your stop losses, please ensure that you give enough breathing space for price action to move around, just in case we witness some choppy situations, retracement moves, and consolidation phases before the next big move will happen here. So we started the week by identifying a range. For the sake of those who are not part of our earlier session, this is what we saw at the beginning of the week right here on the 4 hours time frame, as we saw price action confined within the $16,097 area, and of course the $16,037 level, to emphasize the level of indecision during the first 12 hours of the week. And with this kind of situation, we positioned ourselves above the $16,097 level. Remember, I was mentioning here yesterday that it is more likely that price will break out of the 16,097, that is the resistant line of that range, before we can join any buying opportunity here. And for the fact that price still remains above our key level, which is situated at the $16,000 mark, will be all we need to look out for buying opportunities, and that the only condition that will make us sell is for price to break down, retest, and give us some confirmations before we join. And of course, that never happened, hereby negating any idea of even thinking of selling. Now, for those of us who are joined right now, price action is consolidating right now. We saw the breakout of structure, had about 150 pips in profit on this single one, and I do hope you have moved your stop losses accordingly. And if you have done so, well done. And with a well secured position at this juncture, what is going to be our next line of action for today? Are we going to continue buying the US Tech 100, or are there chances that some profit-taking activities will come in to incite a sell-off, maybe back to retest the level that was broken yesterday? Now, before we go into the details, let's scale up into the higher time frame, that is the 4 hours time frame, and let's look at what is really going on in this particular market. Now, on the daily time frame right here, we were able to identify a key level at the $16,000 level. Now, this level here, if we go to as far back as October 2021, we saw how this level has been playing a strong role in pushing price to the downside. Now we saw what happened here in January 2022. We saw selling pressure around this area, and during the month of July of this year we saw selling pressure around this level, and in fact in the last 2 to 3 weeks price action has been trading right around that area, and in fact it has broken that structure this week to push price to the upside. Now if we zoom into the current structure, as you will see here, the question at this juncture is, from a technical standpoint, when price action does break out a structure, we expect it to come back and retest the structure in anticipation of another wave of bullish momentum. So are we going to be seeing some profit taking activity happen today? If it does, then we could see price retrace back into the 16,100 to inside an uptrend move. Now, to make things much more clearer for us, we went to the 4 hours time frame where we did identify a range which we said we will be using to guide our decisions for this week. Now, on the 4 hours time frame, we were able to spot a range where price was confined, that is the 16,160 and the 15,750, and in fact price has been oscillating within this range in the last 4 to 5 weeks now. Price action has been ranging within this area. Now with our key level at the $16,000 area, you know how we use our key levels in this community. As soon as price breaks out of our key level, we want to be looking out for patterns and structures that supports the idea of buying. Now price action broke out this level, broke out the 16,160 to give us 2 positions running on this particular asset all the way to the upside here. Now we are at a very crucial juncture in the market right now as we get prepared for the CPI data and the Fed interest rate. Now the question here is, are we going to be seeing a retracement back to maybe the 16,160 or the 16,000 area to join an uptrend, to inside an uptrend move? That is price coming back to either here to inside an uptrend or breakdown to insights an uptrend like this. So if this is going to be the case, we will be looking at a minimum of 75 pips to a maximum of about 250 pips to catch here if price will ever drop to the downside. Now scaling down into the 1 hour time frame, we will begin to see things more clearly. Now right here on the 1 hour time frame, it is quite clear that throughout the Asian session, the new level at the $16,260 area had been a major barrier, negating all attempt by the buyers to break out of that structure. Now, if this persists, we might likely be seeing price nosedive to the downside, maybe into the 16,160 or maybe back into the structure or even as far as the $16,000 mark. Now, how do we want to capitalize on this move? Now, presently, price is within a range right now. We have the 16,260 and the 16,230. So we want to be labeling the support line here, 16,230. Have your at the bottom right here. So let me extend this out a little bit so we should see things more clearly. So we do have a range to work with for today. Now, if price will ever break down this range, that is the 16,230, we might be seeing an opportunity to join a profit-taking activities, maybe back into the 16,160. And in fact, if price will break down the 16,160, this could welcome more selling opportunities, maybe back into the $16,097 level. And in fact, if price will break down that structure again to the downside, we could be adding more sell positions to our existing trade. However, as price gets into the structure, we want to make sure that all our stop losses are moved to secure them. That is, if price gets into this area, move all your stop losses, protect your existing position while you wait and see how price would react to that level. So if buy pressure resumes above this level, like double bottom structures or head and shoulder pattern, then the breakout of the neckline will be welcoming an uptrend continuation. The same thing could also happen around this area too if buy pressure resumes around that area. But if it gets broken to the downside, retest of structure will definitely confirm that we will be adding more sell positions to our existing trade. So below the 16,230 is where we shall be welcoming selling ideas on this particular asset. However, considering the strong bullish momentum that got us to this point, we will be looking out for buying opportunities only if price action will break out of the 16,260. Now, as a result of that, I have a buy stop order sitting above the structure to capitalize on the uptrend move, while your stop losses will be anywhere below this level. That's about 25 pips thereabout on that one. So let's see how the market will play out today. We have a very simple setup here, as the range between the $16,260 level and the $16,230 area is simply where our center of focus is going to be for today, where depending on the direction of the breakout will give us an idea into where price is likely going for today's trading session. So let's mark these levels out on our chart, as we will be needing them to guide our independent trading decisions for today. So if you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off and see if there are any questions before we move on to the next asset on our watch list. So I see Top Mind says that he's new to trading and wants to know what do I recommend to? Okay, well, first of all, you will need to get some materials to understand the basics of trading, and we have such on this platform. Go to the home page and look for I think tools or instrument, they called it tools or so. You can read a lot of articles on chart patterns, trend lines, key levels. Read on literatures on how to trade the financial market. Then you can start with a demo account, which the platform also has. Use that to understand how price action moves and how these patterns to influence the decisions the market participant make. And from there, with time, you can now come into real live account to test your knowledge, your test how well you understand what you've learned so far. So I would just encourage you to get some materials, literatures on trading, read them, and that's where you want to be starting from right now. Okay, I hope I answered you, Top Mind, on that one. So Sergio, hello Sergio. I can see Dinesh Kumar is saying that sir, AUD USD, I think you are asking me to you're asking for AUD USD. Well, AUD USD is not part of the assets we are monitoring for this week. This is the Monday sessions at very appropriate time for you to come up with assets you want us to look at for the week. So try to be part of our Monday session so that you can drop in assets you want us to look at for this week. So Dinesh Kumar, that's my advice for you. So I will wish you to be part of the Monday's live session where you can drop assets you want us to look out for. Okay. Best Empire, good morning to you. Mr. Zul, good morning to you. Hello Steam. Okay, Steamroller says get a TradingView free account and learn to mark up levels. Okay, that's another advice from Steamroller there, Top Mind. Oh, you're very much welcome. Okay, so in the absence of no further questions, let's move on to the next asset on our watch list. We are already running out of time here. Okay, so the next asset we are looking at So the next asset on our watch list for today is my favorite, and that is the not the XAUUSD this time around. So right now is the GBPUSD we are going to be taking. That's the cable market. And on the cable market, we have a situation since the beginning of the week that says that the market is very, very choppy right now, as there has been an indecision going on here in the last 24 hours to further emphasize the uncertainty around this particular market. Now, on the GBP USD, the pound sterling appears to be going through some recovery at this point in time, as it gradually approaches that 1.2600 level, that area around this area, which I think a breakout of this structure will be a very, very good signal that price may continue to climb to the upside. Now, at this juncture, despite mixed data from the United Kingdom employment report, attention now shifts to the upcoming US Consumer Price Index report. Now, the pivotal event of the week lies in the interest rate decisions of both the United States Federal Reserve and the Bank of England system as well. So it's very, very important that we exercise caution. And if you have a buy position running right now, I would suggest that you move your stop losses to break even, secure this position, and let's continue to monitor price action from this particular point in time. Now, for the sake of those who missed out on our earlier sessions, let's run through how the week started for us all and what led to the decisions that we will be buying the GBP USD. Now, on the GBP USD at the beginning of the week, it was more of a consolidation phase as we saw price action confined within the 1.25580 level and the 1.25350 level to emphasize the uncertainty that was going on at that point in time. And for the fact that price action was sitting above the ascending trend line we spotted on the higher time frame, we were looking at buying the GBP USD as soon as price action breaks out of the resistant line of that range at the 1.25580 level. And you will see that throughout the last 24 hours, you will see price had consistently broken out of that resistant line. We saw the first breakout here. Price moved about, I think, about 30 pips. I think, yes, 32 pips thereabout on that one. We saw price drop down again. Another entry was triggered here again, and price moved about, how many pips was that? Moved about 25 pips the second time before the bearish momentum came in again. So we had three buy positions already, and each one has been running back into the entry point, giving us break even at both instances. Now we have the third buy position triggered at this point in time, and price action has moved about, how many pips now? That's moved about let's see, about 20 pips thereabouts, which is not bad at all. But at this point in time, we are at a very crucial juncture. But one thing I want us to hold on to here is the fact that price action still remains above that ascending trend line we spotted on the higher time frame, hereby maintaining the bullish outlook we had here yesterday. Now, in preparation for today's trading session, I would like us to run through the higher time frame so we can have an holistic perspective into what is going on in this market. So we started our analysis for this week on the daily time frame, remember, and right here on the daily time frame, what we did was to take into consideration the nature of price action since the month of April of this year. And when we did that, we were able to identify a key level situated at the psychological mark, which is the 1.2500 area. And you will see how this level had played a major role in determining the direction of price action in the last 7 to 8 months. Now, if you look at the structure closely, you will see how this level was a selling niche at some point, selling niche here, We saw a little bit of consolidation phase before price broke out of that structure. We saw price drop down the structure again here before finally in the month of June price broke out of that structure to test to find a new high at the 1.31400 level, and since that time price had dropped and in fact break down the structure again in the month of September. Now, a couple of weeks ago, we saw price action come back to break out of that structure, tested the 1.273 and dropped down again, and we saw a sharp rejection of that key level again on the last trading day of last week, with some buy pressure resume around that area. Now, you would agree with me as at the beginning of this week that we were at a crucial juncture, which is the 1.25 area, and of course depending on how price action reacts to this 1.25 area will be determining the direction of price action. Now, if buy pressure persists above the 1.25, it could be a retracement of that impulsive move that broke out of the structure to incite an uptrend continuation. However, if price action does break down the 1.25 area, we could be seeing this as a selling opportunity. So you can see how crucial the 1.25 area is and how it will be guiding our trading decisions for today. So to make things easier, I was able to identify a simple setup on the 4 hours time frame, which we will be using to project where the trajectory of price action is likely going for this week. So I went down to the 4 hours time frame, and right here on the 4 hours time frame, what I did was to take into consideration the nature of price action since the last week of the month of October. And if you look at what we have here, we have a couple of ascending trend lines which emphasize the strength of the buyers in this market in the last, let's say, in the last 6 to 7 weeks right now. And in fact, we have a couple of these ascending trend lines right here, and the one we will be using to guide our decisions for this week is the one highlighted in red right now. And of course, you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall continue to look out for patterns and structures that supports the idea of buying that asset. And right now, since the beginning of this week, price action has still remained above this ascending trend line, making it more promising for buying opportunities in this particular market. Now, with the information we have gathered here, let's scale down into the 1 hour time frame where we want to be setting ourselves up for more buying opportunities here. And the only condition, let me say here, that will make us want to sell is for price dropping below the 1.25 area to the downside. However, we could probably see some selling opportunities even before the breakdown of the 1.25 happens if we can notice some series of lower lows and lower highs, maybe on our 15 minutes time frame, 30 minutes time frame. Then we could actually join early enough before the breakdown of the 1.25 happens. But at this time, price remains above the ascending trend line, hence it makes quite a lot of sense to continue to look out for buying opportunities. Now, scaling down into the 1 hour time frame, and this is where the week started for us, and this is what we saw here. Now, the bullish momentum is still looking very promising. Price still remains above the ascending trend line that we have here. Now, there is something I noticed here since last week Thursday, and that is the fact that price action has been on a series of lower highs. Look at what we have here. We had a high, we have a high here, and in fact this week price started the week on a positive note. We saw it got into this point before sellers came in, another lower high there. Then in the last 3 to 4 hours again, another attempt to break out of the previous high failed to, as well as we saw another selling niche coming around the 1.2580 area to give another lower high. And when we begin to notice the series of lower highs, it's a clear sign that buyers are struggling to find new highs and that sellers are gradually gaining momentum behind the scenes. Now, if this is going to be the case, we cannot ignore the potentials that sellers could come into this market. And if they come, what is it that we will see on this chart that will make us feel comfortable joining a selling opportunity? Well, it's quite simple. I would like to see price break down this ascending trend line first of all. That's very, very important. And then in addition to the ascending trend line, I was able to spot this level here had a 1.25500 area. Now look at how this level have played a major role in for sellers at some point in time. That was since last week Friday. Look at this area, it was more of a selling niche. Look at this area, selling. We saw here again selling before buyers took over the market at the beginning of this week. Now, right now, price settled around this area and then started the momentum back. Now, if I'm going to be selling, I want to see price take out the zone here. Then that will give me a confidence that we will be joining a bearish move. And in fact, if price action can break down the 1.255, price would also have broken down the ascending trend line, hereby giving us a signal that the ascending trend line may no longer have the capacity to maintain that bullish momentum anymore. So for me, selling the GBPUSD will only happen at the breakdown, and in fact I will need some retest of structure for confirmations before I want to be joining a decline to the downside. And if price continues to drop, then a breakdown of the 1.25350 will be welcoming more sell positions. But I doubt if this will happen today. But if it happens, we want to be on standby to capitalize on that move. But the fact right now is that price still remains above the ascending trend line. Hence, we will still maintain the bullish bias here. And let's see how far this momentum will go. And please do not forget that we have levels at the 1.259 and the 1.26 area where we can add more positions to if price action does break out and retest the structures. So these are my views on the GBPUSD for today. If you do have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next, will I be able to take any next? Okay, let me take the next 5 seconds. We are already out of time so that I can run through my favorite asset, which is the XAUUSD in a moment. So if you have questions, please feel free to let me know in the comment section. All right. Okay. You are very much welcome, Dinesh Kumar. Valia says hello to everyone. Good morning to you, Valia. Trust you're doing very, very well. How there? So, in the absence of no question, like I said earlier, I'm running out of time. So, let's just run through the XAUUSD in a moment. So the next asset on our watch list right now is the XAUUSD, another my favorite asset, of course. And we had a very good start to the week. As remember, we were selling the XAUUSD at the beginning of the week. Now let's run through what really happened and what led to the decisions we made at the beginning of the week. Well, the first thing we saw here was that price action started the week on a strong bearish note, started at around the $2,007.50 level. Then as soon as it got into the 1,995 level, we begin to notice some buy pressure resume around that area. And the fact here is that price was trading, oscillating just around our key level, situated at the psychological mark of the $2,000 area. Now, with the situation we had here yesterday, we said we will be waiting for either the breakout or the breakdown of the structure to give us an opportunity to sell. Now, if you remember vividly, I did tell you prior to the beginning of the live session yesterday that I already had a sell position triggered at the breakdown of the 1,995 level, and that we will be looking out for more opportunity to sell if price action goes on to break down the $1,991.50 level. And look at what we had here. Price broke down both structures and continued to nosedive to the downside. The first sell position here gave us about 190 pips before buy pressure resumed. The second sell position gave us about 160 pips before the buy pressure resumed. And in fact, if you had moved your stop losses accordingly, you must have been taken out with a reasonable, at least a minimum of 150 pips in total on this particular one. So at this point in time, we are not in any positions right now, as all positions has been taken out at this particular point in time. Now, how do we intend to capitalize on the next move for today? Well, if we look at the fundamental factors on this assets, this really is really affecting the asset anyways, and we cannot do anything without understanding what is the structures and factors that is guiding the market sentiment on this asset. Now, our selling pressure is now, and all our short positions have been closed with reasonable amount of profits, marking a respite for the precious metal during the Asian session. As a result of this, I'm of the opinion that market participants are now adopting a cautious stance, anticipating the release of the United States Consumer Price Index data, which is expected to provide a new sense of direction for market participants. Now, amidst the drop of a belief that the US Central Bank has concluded its tightening policies and could initiate rate cuts by the first half of 2024, the previous bullish momentum in the US dollar, which we capitalized on yesterday, spurred by positive job data, appears to be tempered at this point in time. Concurrently, concerns about the escalation of geopolitical tensions in the Middle East could act as a catalyst, providing a supportive backdrop for safe haven assets such as the gold. Now, given this development, our attention will remain within this fixed range here to decide what our next line of action will be. So on this one, we do not need to scale up into the higher time frame. Okay, for the sake of those who are not part of our live session yesterday, let's run through the higher time frame and refresh our memories as to what we saw at the beginning of the week. So for the sake of this session, I will go into the 4 hours time frame instead and look at what we have here on the 4 hours time frame. Now, on the 4 hours time frame, what I did here was to take into consideration the nature of price action in the last 4 to 5 weeks. Is it 3 to 4 weeks, I think? And it's quite obvious that price action was bullish, and we had an ascending trend line to buttress that, as you will see here, and coupled with our key level, which was situated at the $2,000 mark. As you will see here, this level was initially a selling niche at some point before it was serving as a buying niche, but finally we saw price broke down the structure today. Now, with the situation we have here, price breaking down both the ascending trend line and our key level at the $2,000 mark, and the sudden appearance of buy pressure here could probably incite some buying opportunities, maybe back into any of the structure. It could be the $2,000 mark or the ascending trend line to incite a downtrend continuation. Well, pending the time that happens, we don't know if it will turn out to a downtrend continuation, but in the meantime, price action is right here, and we have a chance of scooping over a minimum of 140 pips to a maximum of about 300 plus pips to catch here. And of course, if this is going to be another wave of bullish momentum, maybe a retracement of that impulsive bearish leg, then we do want to be on standby to capitalize on that move. Now, to do this, we will scale down into the 1 hour time frame, where we will be looking out for trading opportunities for today's trading session. Now, on the 1 hour time frame, we are back right within the familiar structure which we identified yesterday, and in fact right now you will see that price action is currently within a range. And remember, we are not surprised at this development, as price action appears to be running through a flag structure here. If you take into consideration the impulsive bearish leg that got us to this point. Now we have something that looks like a flag pattern, which more or less tells us that price action is likely going to be continue to the downside at this point. And if price is going to continue to the downside, we will need price action to break down, retest the support line of that flag pattern to join a downtrend move, which is yet to happen at this point. So basically what I'm going to be doing here is to focus my attention to this area between the $1,991.50 level and the $1,981 area, where depending on the breakout of the structure will determine where our next line of action will be. So to buy the XAUUSD today, I want to see price break out of the $1,991.50 level, where I already have a buy stop order to capitalize on that uptrend move. And if price continues to climb and find new highs, I have the $2,000 mark and the $2,007.50 level to maximize the potential of this bullish move. However, if price action drops and then breaks down the $1,981 level, we had some self-stop order there. The breakdown of the $1,976 level is likely going to incite another massive sell-off to the downside. And for those of us who would like to capitalize on a selling opportunity even before the breakdown of the 1,981 level happens, well, a breakdown retest of the flag pattern will be all we need to join early enough even before the breakdown of the 1,981 level happens. So let's keep this in mind, mark out these levels on our chart, and let's see how the market will play out in the next couple of hours. So this is my simple view on the XAUUSD. Personally, if you ask me, I think price is going to break out of the 1,991.50 level to incite an uptrend move. But if it does the opposite, we do want to be on standby to capitalize on that move. So at this point, what is going to be our plans? Just focus on this range. Let's wait for a breakout or breakdown of that range to give us an opportunity to trade for today. So if you have any questions, feel free to let me know in the comment section. It's on this note. We will be rounding off at this point. So while I'm rounding off, I will be checking the comment section to see if there are any questions. So we were able to attend to 4 major assets for today's trading session, which includes the USOILSPOT, the USTech100, the GBPUSD, and of course the XAUUSD, where we were able to identify simple trading setup using our fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today. So I encourage us all to exercise patience and allow our structures to mature before we jump into any positions. And for those who have running positions, we did talk about moving our stop losses accordingly. Please remember to do so, as we are likely going to be seeing some volatility today as market participants anticipate the CPI data from the US economic docket. Now, for those of you who are joining us for the first time, I do hope you are able to gain 1 or 2 things from this session. If you do want to be part of the next subsequent editions, trust me, the more time you spend with us, the better you become in understanding our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. I think that is all for today. No more questions here. I see Steamroller's comment. You are very much welcome, Steamroller, and do have a wonderful day out there. 2525001. Well done to you. Glad to have you around with us. So in the absence of no further questions, I do want to wish us all the best of luck, and always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. And it's on this note, I will say that it is important that you have a well-defined risk management for every trade you take from your portfolio. So do have a wonderful day, everyone. Trade smart, trade consciously. Bye. Bye.